Hi there, all you beautiful people. How are you all doing? I hope you're all doing incredibly well. And welcome back for another monthly dose of your Bay Area real estate market knowledge. So today, I wanted to talk to you guys about what's been happening in this past month in the market, in the real estate market, specifically here in the East Bay Area, because that's where I do the majority of my business. So as previously mentioned, I like to split this up into, how does it look? I give you guys some numbers. What does it mean? Which is just, what are these numbers? How do these numbers impact you? And then in the end, what do I recommend? Which is just if you're either a buyer or a seller, what do I recommend that you do? So first and foremost, how does it look? So in the past week, not the past month, but just in the past week, interest rates have gone up about a 0.5% to 1%. Now, obviously, this varies lender by lender. Different lenders, change their interest rates at different speeds or different amounts. But, I quickly looked through like my personal preferred lender, and I looked through 2 or 3 other big lenders, and it's pretty consistent across the board. They've gone up about 1% to 1.5% in the previous month, and as I said, it's been about 0.5% to 1% in just the past week. Last month, in the month of August, things were kind of hovering, anywhere from 4 to 6%, and now we're seeing that things are kind of hovering anywhere from 5 to 7.5%. So interest rates are definitely starting to pick up a little bit. I like to do the majority of my business here in San Leandro. So I'm going to read out some market stats that are pretty interesting in my opinion. If we compare what the average list price was just 4 months ago, and then we compare what the average sales price is to just 4 months ago, we see that 4 months ago, and this is specifically pertaining to the city of San Leandro, which, as I said, is where I do the majority of my business. Just 4 months ago, in the month of May, the average list price was $936,000 here in San Leandro. And now the average list price is $875,000. That's nearly a $60,000 difference, or that's a $60,000 difference in list price. That alone kind of shows us how us realtors are seeing the market and how it's actually pulling back a little bit, and how it's actually it's not as booming as it has been in the past, in the past year. The more fascinating thing, though, so listen, there's been a $60,000 difference in list price from May to September. The average sales price has gone from in May to $1.06 million, all the way down to $855,000. That's a $200,000 difference. So the list price hasn't changed much. I mean, it has, but it hasn't. It's $60,000. But if we look at the sales price, it's gone down $200,000, which is crazy. And I think this is something very important to look at and something very important to keep in mind, because I want to look at what it means now. So what does this recent rise of interest rates and what does this drop in list and sales price means for you, the potential buyer and seller? Well, let's start off with the potential seller, because this is something very important to keep in mind. This is something that is very similar to how it was last month. If you need to sell, and this is a difficult pill to swallow, right? And this is something that I want everybody to understand. Even though people do like to look at their homes as investments, and it is an asset in reality, buying and selling homes is very different than buying and selling stocks. A stock you buy simply and purely for profit. A home you buy to live in. Now, if you could also make some money doing that, that's obviously the perfect situation. But remember and keep in mind that you buy and sell homes out of necessity because you need a place to live, or because you just had a baby, or because your oldest child just moved out, so you need to downsize, whatever the case may be. And not because of how much money you're going to get. I understand, and this is another thing to understand too. If you have multiple properties and you're able to buy and sell whenever you kind of need, or whenever you kind of want to, not when you need to, that's a whole different ballgame. You can treat the market differently than the person that has one primary residence and that's it. And And that's important. And I mentioned this because if you're if you're a homeowner and you're selling in an upmarket, and then you're going to buy, well, you're also going to buy in an upmarket, so you're not necessarily getting the full advantage, you know? Now, on the other hand, if you had two properties, let's say you were living in one and you were renting the other, and you decide, you know what, that one that I'm renting, I'm going to move into, and I'm going to sell the one that I'm currently living in, then you can do that, and you can take advantage of the market being high. Now, all of that being said, if you are a person that has multiple properties, and you were looking to capitalize on the recent, semi-recent, by recent I mean in the past 2 years, rise in home prices and home values, then you might have missed the mark. Truth be told, as I said, the recent, just in the past 4 to 5 months, the sales price has dropped about $200,000. So that's on average $200,000 if you live here in San Leandro that you would be losing just because you waited an extra 5 months. Now, once again, if it's your primary residence and let's say you have other reasons, let's say it's time to upgrade, or it's time to upsize, it's time to downsize, or it's time to right size, whatever it is that means for you, then it's still a great time to do that, And one thing that I like to point people to is, let's say, especially for those people who live in their primary residence, if you're going to sell in a down market, well, the great thing is you're also going to buy in a down market, so it kind of evens out as well. And these are very important things to keep in mind. Now, you could use a 1031 exchange, and let's say you sell your property, you buy something a little more expensive than what you sold, then you get to keep all of your money tax-free. And that's also it's a wonderful little thing that I think everybody should take advantage of if they're planning on buying or if they're planning on selling and then buying another property. Now, for buyers, there is so much reluctance on the buyer side of things, and I don't understand why. I think if you send an application into your lender and they tell you that you qualify for a certain amount, and if that amount that you qualify is enough to get yourself a property that you would like to get into, I think it's a fantastic time to do it. And the reason why, and this is what I recommend for you buyers, there's a famous quote. I understand that I said do not look at the asset of buying a home like the asset of owning a stock. I know I said that, but there is this very wonderful quote that I think should be applied to anything's investing or anything's business related, and it's said by the great Warren Buffett, which is be greedy when others are fearful and be fearful when others are greedy. Right now, buyers are very fearful, so be greedy. If you can qualify for an amount that can get you a property that you would like to get into, go for it. Because I want you guys to keep something in mind. You marry the house and you date the rate. Okay, if rates go down in the future, you could always refinance. That's always an option for you. Now, another thing that could happen, rates could skyrocket. Rates could go to 10%, 12%, 15%, which isn't crazy because we've seen that happen in the past. And if that was to happen, then I'm sure you're going to be so happy that you locked in this 6% interest rate as opposed to that 15% interest rate that could happen in the coming years because no one knows. So this is something very important to keep in mind. Once again, be fearful when others are greedy and be greedy when others are fearful. So for you, the potential buyers, understand this. Right now, there is not a lot of competition. There's not a lot of buyers looking out to buy. There's a lot more inventory. Things are taking so much longer to sell. Take advantage. Interest rates have gone up 2 to 3%, but they're still 2 to 3% lower than what they have been historically, and they're still 15% lower than the highest that they've ever been. So it's crazy to just see how buyers are looking around and looking at other buyers and thinking, oh, well, they're scared. I should probably be scared too. And they don't go into it. But that's not the right mentality, especially when it comes to investments like this. If you can qualify, once again, just to wrap that part up for buyers, if you can qualify for an amount that can get you into a property that you would like to get into, I strongly suggest and I strongly urge you to do so. As I said, if the interest rates go down in the future, you could always refinance. And if they go up, then you're going to be so happy that you locked it in at the interest rate that you are today. Okay? Now, for sellers, what do I recommend? If it's your primary residence and it's time to sell. Let's say you either your child moved out, your oldest child moved out, and now you only need a 2-bedroom instead of a 3-bedroom. Or let's go ahead and assume that you just recently had 2 children that are coming to an age in which they kind of want their own bedrooms, and you want to go from a 2 to a 4-bedroom. It's still a great time to sell. And this is why, and I know that this might be kind of counterintuitive, but this is why. As I previously mentioned, you may be selling in a market that isn't perfect for sellers, but you're going to be buying in a market that's perfect for buyers. Now, one thing that I definitely do encourage all of you sellers to do is to try to buy a property that's just slightly more expensive than the one that you're going to sell. And the reason why, and talk to your CPA, talk to your tax accountant, talk to the escrow company that you're going to end up working with. Make sure that they're all aware that you're going to be doing a 1031 exchange, because there are certain things that have to happen before you end up getting that property. Okay, you're not actually supposed to touch the money after you sell that first property before you get that second. What's supposed to happen is the escrow company holds onto that money for you, and they literally use the money that came from the sale to go and purchase that next property. And by doing so, it's tax deferred. You don't pay any taxes on any of the gains, which could save you tens of thousands of dollars, maybe even hundreds of thousands of dollars, depending on how much your property is worth. Now, for those people that have multiple residences, and we're trying to get, for people that have multiple homes and we're trying to sell their home in that upmarket for sellers, you might have missed the mark. I'm not gonna lie. If we look back, like I said, just 4 to 5 months, in the city of San Leandro, homes were selling for an average of $1.05 million. Now in the city of San Leandro, homes are selling for about $855,000. That's $200,000 of difference. So if you were going to sell your property just for the purpose of trying to get the most amount of money, you might have missed the mark. As I said, if it's time to sell, one of the benefits of selling right now is that if you're going to sell in a down market for sellers, you're going to buy in an up market for buyers, right? This is very important to keep in mind. So that pretty much wraps it up. So if you have any questions, I'd love to talk, I'd love to chat, and I'd love to help you out in whatever way that I can. It's been a pleasure sitting here and giving you guys some real estate knowledge here, like I said, in the Bay Area, predominantly in San Leandro, California, which is where I do the majority of my business. Once again, I hope you guys learned something new. I hope you guys have a wonderful rest of your day. Take care. Goodbye.